Hey guys, welcome to another edition of Tone's Market Analysis for Friday, November 10th. Wow, glad to be home. It's been a lot. I spent a lot of time on the road. Even last night, it's weird when you spend so much time on the road. I'm in my own bed for like the first time in a while, and I'm like waking up in the middle of the night. I'm like, where the hell am I? Like that's how long it's been since I've spent time in my apartment. And yes, the audio is going to be much better because I'm back to a really good mic. Way more relaxed, got some sleep. The trolls don't bother me. See, you guys don't realize how stressful it is. Like, I put my entire reputation on calling a top at 7,500, right? And I was ready to be wrong. And now it looks like I was right. So and we're going to talk about that. I'm going to talk about why I called it the way I called it. Everyone is going to pick on the littlest, smallest things, why I was wrong, and when they can't, and when they can't win that argument, they're going to start talking about scams that I've been wrong on for the time being, that I will also prove to be correct on eventually. So I'm actually I don't have as much time to engage trolls anymore. So I just don't have any free time anymore, guys. I have a giant backlog of people that want to do consulting sessions, and I apologize. I'll be emailing everyone today and tomorrow. I have like emails from like a week ago. People are like asking me to pay me. Hey Tone, what's your Bitcoin address? I want to buy the indicator. I want to do consulting, and I just have not gotten back to them, right? Because I just focused on videos. I'm focused on sending tweets whenever I could. But I will get back to you guys. If you feel that it's been too long and I haven't gotten back to your email about a consulting session, please email me again. Like, that's perfectly fine. If you're emailing me about your ICO, I probably will not even have time for a sarcastic reply, as much as I like to do them. All right, guys, let's do some screen share. We are going to do the Bitcoin group in about an hour and a half to 2 hours. Yeah, so like around 2 hours from now, we'll do the Bitcoin group, like hour and a half from now. So something like that. All right, so be ready for that. So head on over to the World Crypto Network in about a minute. Oh man, so good to have easy, like, multiple monitors, so I can like mute if I have to. All right, hold on one second, guys. All right, let's get back into this. So if you haven't yet been to my website, you have to go and check out the Learn Trading section. There's lots of information here. I'll just tell you that back in the day, 15 years ago, I paid $15,000 to learn everything I posted on my website, and you now have it for free. And So check that out, okay? And click on all of these links. And when I have time, I will add even more material for you to learn how to trade. Also, check out the consulting section on my website right here if you are reaching out to me, and I'll make this a little more robust. And I'm also, while I'm home this week, I'm going to put in another section into my website for like my seminars and stuff, because I want to start doing more of my own seminars. My calendar is a little off. There's some kind of an event November 14th. I was gonna go. I was gonna try and reach out to them to speak. I don't think I'm gonna go. I don't think I'm definitely not speaking. And I don't think I'm gonna go because I think it'll be a waste of my time. At this point, going to these events is a waste of my time. As much as I try to explain to people and conferences and Wall Street how dumb a lot of their ideas are, no one is listening. So I'm better off just doing more videos. And for me to go to Manhattan is like a waste of a half a day. Even sending out an extra useful tweet would be good. But I will be in in Colombia, and I will be in Toronto, and I will be on the blockchain cruise. All right. So for those of you that are that feel like going on a cruise from Singapore to Thailand. All right. Anyway, let's jump into the markets. I'll talk about my Twitter after. By the way, I can no longer, even if I switch, like this is now useless. Like me going to my notifications is unreadable. Me going to the mentions of my notifications, this is still readable, but only up to a day back. So when I took that little time off, well, when I took the evening off 1.5 days ago, I can no longer get to those tweets. Like if anyone sent me a message the evening of the 8th, I don't see it. I don't see it anymore. Like I can't scroll back down far enough, which is unfortunate. And now I understand how, if you're very popular on Twitter, it's impossible for you to see all of your notifications unless you're constantly watching Twitter, which sometimes I am, sometimes I'm not. Anyway, let's jump into the markets. I'm going to try and go through traditional markets fast because I also want to get to the Bitcoin for you guys. Here's the S&P 500. We are at all-time highs. I pulled up the monthly chart. I just want to point out the following, right? After the election, right, after 11:01, okay, I put the following on my chart after the November election. So 1 year ago, here's what I put. On November 11th, Tom DeMark told MarketWatch that he now sees an S&P 500 top of $1,268 to $2,275, followed by a 5 to 6% drop via a 2,100 top with an 11% creation, as he stated pre-election. Okay, so that should be correction, not creation. So he was looking for an 11% correction due to the election. After the election, he was looking for a rise up to 2,275, which was right here in February. And then he was looking for a 5 to 6% correction. A 5 to 6% correction on the S&P 500 at these prices is basically like a $200 drop. As you can see, that never happened, right? And this is the person who created the indicator, that I slightly altered, that I use as my primary means of trading, right? So look, the best of the best can be seriously wrong when it comes to predicting market tops. Predicting market tops is incredibly difficult. It's a lot easier to call a bottom than it is to call a top. It's very, very hard. Okay. Maybe I'm lucky. Maybe I was lucky, but let's see. Well, we'll get to the Bitcoin soon. So here's the S&P 500 monthly, and we hit a 9 according to the one that Wall Street sees last month, according to the one that I see the month before. But according to the one that Wall Street sees, we hit a high in October. So let's see if the stock market is in for a 1 to 4 month correction and then higher, because that's what I'm looking for. Save that, close that. The weekly, again, we're at all-time highs. There's nothing I can do. I have a Fibonacci extension. There's nothing else I can look at here, right? RSI all-time high. Not all-time high, but RSI new relative high. MACD new relative high. They're not crossing. They're not going down yet. So all I can do is try to time it with the time indicator, and boom, we had a 9 last week. So now we had a weekly 9 coming off a monthly 9. Oh, wow, a weekly 913 coming off a monthly 9. I mean, I'm bearish here. Like I took out all of my trading money, right? Because I trade traditional markets. I trade traditional markets in my retirement portfolio. I had all of that money in the options market during earnings. Earnings is over. My money is in cash. I'm not going back into the S&P 500, my retirement portfolio, until I see how this plays out. I'm more than happy to inform all of you on video when I will move my entire retirement account back into the S&P 500. Okay, though the Dow has been performing better, but either way, like Dow, S&P 500 doesn't matter, right? So for now, I'm in cash. I'm not shorting. Well, I can't short in my retirement portfolio anyway. I can buy puts. I can do that, but I'm not going to do that. But I'll wait. I'm going to wait till this plays out, and we'll see what happens. Save that. Close that. The daily. Let's look at the traditional daily. I'll make this fast. We have the 50-day moving average, and I think we're going to get there, right? We had a bad day, and then we pulled all the way back, but we need to go above the highs, right? We need to go above the highs. Let's see what the time indicator is telling me. We had a 13. Wall Street sees this. Wall Street actually cares about the 13s way more than I do in Bitcoin, right? Like the 9s are important, but the 13s can be even more important than the 9s for those that are trading this indicator, for the Wall Street guys that are trading the indicator. I know, because that's where I learned it. So because of that, they could have been looking at it, and prices dropped a little bit. I'm not surprised at all. Now, right now, these numbers are telling me that you should be in cash, no long, no short, because the color flipped, telling you to potentially go short. Now what you need is confirmation. Confirmation comes when the price of a candle with a red number above it starts trading below the candle of a previous red number. So if on Monday we start trading below Friday's low, the daily chart of the S&P 500 becomes a short. All right, save that. Hi. That's okay. If you speak louder, my followers will hear you. Okay. Got guests. All right, let's get back into this. Okay, save that. Close that. Gold. This is the monthly chart of gold. Again, I'm going to make this very, very quick. This is a troublesome pattern for a technical analyst. Like, forget the fact that it's gold. Like, I know that it's gold, but like, forget the fact that it's gold. Just look at the chart, right? Your 200 moving average, which happens to be 200 months, is moving up. Your 50-month moving average is going down. Now, if you like your technical analysis, you wanted this to keep going down, bounce off the 200, go back to the 50, bounce off the 200, go back to the 50. But we went above the 50. So I'm not exactly sure what that means. Now, you still have room on the RSI to go to overbought. The MACD is, I was going to say it's useless, but it looks to be fairly positive. So that looks good. That looks good. But technically speaking, you have a lower high, but it's a tricky one, right? Because let me zoom in a little bit. It's a tricky one, right? Because if I don't know, I don't know if that's a double top or a lower high. Like I don't know. Like it can be both. Someone can make the argument that this is a double top. I can easily make the argument that this is a lower high. It's complicated. This stuff isn't always like easy. Sometimes it's complicated. Now let's see. How did the time indicator do? Well, it certainly helped here. Not so much there. Not so much here. And it certainly helped here. And it's not really helping right now because I know this month just started, but if this month goes any lower, then the next month is going to flip you in color. You do have this 13 count that's still in play. So like the monthly chart of gold is kind of useless to me right now. It's just useless. It's not bullish. It's not bearish. I have no, like it's not helping me at all. Like the monthly chart of gold is telling me absolutely nothing right now. I can make an argument why it's bearish. I can probably make a better argument why it's bullish, but it's not enough for me to trade on. I mean, I need more. I need more stuff. Weekly. Here's the weekly. Again, we broke this, but now we're below it, right? Like we broke about. I mean, look, this totally screwed me, guys. I mean, I was looking for the tip in this triangle and then a breakdown, right? Didn't happen. This can now be adjusted to the upside. The MACD is obviously bearish. The RSI, I don't know. I leaning bearish. I don't know. It's long-term view, not very helpful. Leaning bearish though. Let's zoom in. I do have a bear trade. I have a short trade on this. Now, it's a temporary short trade because we broke out. So the most likely scenario is for us to go higher, but I'm also thinking of fundamentals, and fundamentals of gold are just shit, right? No, I'm not going to get into why, but they are. Maybe if Bitcoin didn't exist, I would be way more bullish gold's fundamentals, but not in the world of Bitcoin. Not as long as Bitcoin is a viable asset. So the time indicator is still bearish. We're on a 7. Let's see what happens if we get to a 9. But we can get a 9 at current, like a smidge below current levels, right? The moving average is coming up. This is starting to get way too cluttered, and I don't like it. Like there's too many support lines, too many resistance lines. It's becoming a cluster, right? It's my chart is becoming this. My chart is becoming like this, right? Like this is what my chart's starting to look like, right? I mean, I want my charts to be readable. I mean, this is ridiculous. And for those of you that read my website, this whole thing is one chart. This is one chart. It's not two charts. It's one chart, right? This is not readable to me. Like this is what you don't want. All right. Okay. Anyway, let's get back to this. I'm leaning bearish, still sticking with the short trade. Save that. Close that. The daily. Here's the daily gold. Again, looking at traditional markets, ignoring the time indicator, I was looking for the inverse cup and handle. Clearly didn't work out, but clearly we're below the moving average on the daily 50. We're below the previous high. I mean, your RSI is slowly trending upwards. Your MACD is useless. There's nothing here. Like if you get back to this line, it's still ugly, right? I mean, there's nothing here, guys. We can throw the numerical indicator on. You had a 9. You had a reason to be short-term optimistic. You have a price flip. If next candle, if Monday gives me a lower low than Friday, I'm bear. I'm a bear. I'm a bear on the daily gold. I mean, and once we go below the 200-day moving average, that's bad. That's just bad. All right, save that, close that. Oil. I was looking for this inverse head and shoulders. I don't even like head and shoulders patterns, right? I didn't really care much for head and shoulders, but this is just so obvious. And what I really liked was the bounce off the 50-day, and then the bounce, 50-week, and then the bounce off the 50-week again, and then the bounce off the 50-week again, and then it failed. So when it failed, I had this channel, but then the channel failed, right? And now we're back. So now this, no way that's going to happen, right? Because look, the target was this at the time. The target was this a year ago. Wow, I can't believe by the way, I've now been doing these videos for over a year. Amazing, on my channel. The target was the 200-week moving average a year ago. Today, the 200 moving average is significantly lower. And look, we almost hit it. So we met the target, relatively speaking. What else helped you? And that's where this was the trade, right? The green thing is the trade. Now, what helped you pick the top here was right there, boom, the indicator, right? The 9. the 9. And I'm sure I said this last week when I did this video when I talked about oil. This is where you look for your gains. This is where you take your profit. I came close. I mean, this was the trade, the green part. Like I even lowered my stop loss to the minimum possible, because if I make it a if I raise my stop loss all the way, then I can't draw it on this software, right? So this was the trade. This green zone, it was the trade, and I came pretty damn close. And oil is leveraged 50 to 1 on the CME futures, which, oh crap, I need to get to those. Hopefully in this video. So I don't know. I don't know what to tell you guys. I don't know who's posting. Like, I gotta get some admins. I'm just gonna start blocking people randomly. If I see anyone posting a Bitcoin QR code, I'm gonna block you. Because I don't know if it's mine. I don't know what my QR codes are. So don't post any QR codes in my channel. Anyway. Right. So there it is, right? There's a giant red arrow. Like I didn't draw it in there. I just turned on a time indicator. All right. Next. Yeah, that's it. I mean, that's all for oil. I mean, take your profit and then you wait for next week. See what happens. Look for a 1 to 4 candle correction and then probably higher into a 13. And if this gives you a price flip and it gives you a bear entry, then you go all out short on oil and maybe wait for the 50-week moving average. But you got to play it by ear. You got to trade when the odds are in your favor. Not when you no not when okay. So here's the thing, right? You need to make trades when it's probabilistically in your favor, not when it's convenient for you. If you only have time to sit in front of a computer between 8 p.m. and 9 p.m. Eastern time, that's not when you should be trading, right? You need to be trading when it's convenient, when it's probabilistically convenient, not when it's time convenient because your kids just went to bed. I mean, that's how you lose all your money. All right, save this, close that. Next, euro. I'm not even going to talk much about the euro. Yeah, so I was wrong by a couple of weeks. The euro is still a disaster. There's your RSI, there's your MACD. Everything is bearish. You are now below the 200-week moving average. I'm bearish on the euro. Here is the trade, fully in the green on the short trade of the euro. I am expecting it to keep going down. I'll throw on the time indicator just in case. We're on a 7. So if it gets 2 more weeks of downside, I would consider taking the profits from the short trade and then see what happens, right? 1 to 4 candle correction, then probably lower into a 13 on the countdown. All right, save that, close that. All right, Bitcoin. Should probably maximize the screen here. Yeah, let's do that. Okay. Here's the weekly chart of Bitcoin. I removed all time indicators from this just to take a look. By the way, hey, thank you guys for following. Thank you for retweeting. Thank you for the support. Thank you for going at some of the trolls, because I don't have time when you make a call and then 8 seconds later they're all like finding reasons to call to pick on it. Like, give it time. Give it time. Most of these people aren't even traders. Okay, so just based on traditional, right? I mean, if we bounce and make a new high, I'll probably finally remove these arrows. I mean, these arrows have been here for a while because we never retested. Like, look, ever since we started going up, right? Ever since the Greek banking crisis, we went up to 500, pulled back to the prior high of 300. We, took a while. We went back up over 500, up to 700, pulled back to the prior high of 500 right here. I should make these more audio friendly, so I should talk about dates. Then we went up and hit a high of 1300 in January, and then we pulled back down to 760, which I called perfectly, by the way, on the bounce. Please go back to my Twitter from January and my videos from January, because that was the prior high, the 760 high back in June of 2016. We went up and we pulled back. Let me zoom in on this, right? I mean, this is what I'm talking about, right? I mean, we went up, pulled back to prior high, or close enough. I mean, it was close enough for me. It was right here, right? We went up and then we pulled back down. Then we went up again, bounced around, went up, pulled back down to at least the high. We went up again, pulled back down to exactly the high. Went up again, pulled back down to lower than the high. I was fine with that, right? Because we stayed above the previous high. This was the problem. We went up too far. We just went too far, got a little too far. And when we pulled back, we only pulled back halfway, which is why this is still a problem. Then we went up, and when we pulled back, we hit the prior high. Now we're up again. When we fall, where do I want to see it end? I want to see it end at the prior high. Because if we don't end at the prior high, panic can set in, and 1300 still becomes the target. So I am looking for a correction to 5,000. It's nothing different than anything that has taken place in the last 2 years. This is perfectly normal. I am not upset by this. This is perfectly normal, and needed. Okay, so look, your RSI is about to go negative, not negative, but out of the overbought. Your MACD is nowhere close, but the MACD is always lagging by a lot. Your RSI might help you. Will we one day hit this giant trend line? I don't know, maybe, but it's getting out of hand, right? I mean, I'm putting my cursor on the trend line, and I see $25,000 by February of next year. Can we bounce off this 5,000 and go to 20, 30,000? Yes, it's possible. Can we also blow through this 5,000 and go all the way to 1,300? Yes, equally as possible, right? So this is why now that people are realizing that the $7,500 top is in, now everyone is asking me, how far are we going to go? Guys, I have no freaking idea. I don't know how far we are going to go. Okay. Right now, I have been warning people for weeks that a healthy correction is back to 5,000. Am I going to be right? I don't know. Am I going to change my mind every single week? Of course, because with every single hour, I have more and more pricing data to make a more and more accurate call of the future, whether it's a short-term call for the following hour or a long-term call looking out a year. Okay. I'm adjusting everything every time I look at the price. So let's throw the numbers on it, and no one should be upset about this. Like, I'm not. I'm perfectly fine. Did I sell a single Bitcoin at the top? No. Would I have shorted the shit out of Bitcoin with the CME futures? Yes, I would have. So I'm actually looking forward to them coming out. All right, let's see what we got here. So here's the weekly chart. Lots of important things here, actually. It's still bullish, but please go back to prior videos and you'll know why I called the top at 7,500. Here's the thing. In order for this to remain a green 6, all we have to do is stay above $5,680. So even if we fall all the way down to $6,000 this week, this will be a green 6. And guess what that means? That means the following week, we can fall all the way to $5,000 early in the week and then come back up above 60 and then come back up above 6,000 by the end of the week. And that means we have bottomed and the count stays green. Okay. This is really, really important. We can pull back all the way to 5,000 and still go to all-time highs by end of month, creating a green 9 sell indication like this later in the month. This is totally doable. And this is the kind of thing that I have to consider in making these calls. Now, I'm making these calls, 1 hour at a time. So we are going down. And I'm going to explain how this could have been played with trading in hindsight. However, right now, it's very, very possible for us to go all the way to 5,000. 1 second. It's very, very possible for us to go down to 5,000 and still bounce and still make a green 9 sell count. Okay, just keep that in mind. All right, you have to understand where these numbers are coming from. And if you don't, please go to the Learn Trading section of my website and read section 6. But you should only read section 6 if you're an expert on sections 1 to 5. All right, this is the weekly. Let's save that. Let's go to the daily. I mean, I can pull up the monthly actually. Like if I pull up the monthly, it's a 9. It was a 9. It's my 9. Wall Street would have had it 2 months later, right? But this 9 is important to me. And by the way, no one says that my version of the indicator is any worse than Wall Street's, because anyone can update, and this is working better for me. That's what I'm using. Okay. All right. Save, adjust, down, daily. The daily. Here's the daily. I only adjust these arrows live on camera, guys. I know this red arrow was adjusted, but it was adjusted a week ago. Okay. Let's talk about the daily. Let's talk about what happened. I'm not even going to look at the momentum indicators. Let's just talk about what happened. I don't even want to go to my tweets. Like, oh God, like maybe I should. I've been preparing people for a month. I've been preparing you guys for a month. Where am I here? I guess they're all in here. There was a tweet I sent to someone on Bloomberg. How far back did these go? Right. How old is this tweet? This is November 2nd, right? I have my green arrows a little too far back, right? So what is this? Oh, no, that's when I sent this guy. Look, I warned people right here, 9 with the green arrow, like before it even happened. I've been warning you guys right here. I don't remember when this tweet was taken, right? But look, I've been warning you guys. I've been warning you guys, right? My target, look, 7,300. We even beat that, so I adjusted. I adjusted in real time. Here, what did I say? These were my targets. These were my targets for a month. For a month, I remember what I've said. I always did, right? I even moved it out. Anyway, just look back at my Twitter. Just look back at my Twitter, guys. Look, I've been saying since we crossed 6,000, I was saying that this is the time to look for an exit. This is not the time to go long. Now, I was expecting 7,500 to be the top. And those of you that watched the World Crypto Network, when Tour de Meester came on the channel, he's a professional trader. Tour de Meester came on the channel. I asked him a question straight up. Tour, did you get out at 7,500 3 or 4 days ago? And you should have, he mumbled. He said, yes, I did. Okay. Because he's a professional trader. He knew it was going to happen. He knew he did not want to risk the instability of the hard fork. He knew what was coming, and so did I. Okay. It was obvious to us that it was time to get out. It's normally not very obvious. So now let's talk about the not so obvious part. Turning on the indicator, the backtest version. Look, as we were approaching this 9, I thought there might be one more, but this 9 came at such a high price, I ended up calling it. I called the high at 7,500. Just go to Twitter, go to my YouTube videos. This is a doji. This is a reversal doji. Guys, the market makes it so difficult. So difficult. Okay. Yes, the market went higher by $400. It was only higher for an hour and a half. So both things happened. Okay. I warned people to get out early. And I always said the market is not here to make your life comfortable and easy and make you a billionaire. The market is here to take your money. So when the 2x4 got canceled, yes, your stop losses on your short positions would have gotten stopped. And now you're kicking yourself because you had the right trade. Just because you call it right, it doesn't mean you're going to make money. I actually blew up a futures book like this once. Okay. That's exactly what happened to me in the futures market. I got crushed. I didn't have enough margin. Same thing happened. I was short on like commodities, over leveraged, short commodities, gold, oil, silver, everything. And then Janet Yellen does the opposite of what the market expected her to do. I ran out of margin. I got stopped out at the peak, and then the commodities crashed. Okay, it happens. It happens. Okay, but the call was correct. Trading that call, very difficult, but that's the call, right? Look, this is why you stay out of the market. This is why there was, by the way, where there was a short trade on a daily chart? Right here. The moment the candle with the red number 2 started trading below the red number 1, there was a short. And what did I say in my last couple of tweets? The support, the 7,000 support. I tweeted out last night. The 7,000 support is getting weaker and weaker by the day. And the moment it breaks, expect panic, expect drop to escalate. Worked out exactly like that. Now, according to the daily chart, you're looking at 7 more days of downside. My target, right now, my target's 5,000, but I don't know. I have no idea where it's going to bounce. I mean, if we fall to 5,000 tomorrow and bounce back to 6,000 the next day, am I going to say the bottom is in? Probably. Or if we stay here and go past my arrow, right? I randomly draw these arrows, guys. Sometimes randomly. Like these weren't too random, but this one was random. So if we're still trading at like 6,000 going into December 31st, am I still going to think we're going to go to 5,000? Probably. Like, I don't know when. I don't know where. I'm taking this one day at a time, but I'm not panicking. I'm not surprised by this because I expected this pullback and I'm happy for it. I'm happy for this pullback. I will get to buy the dip. Yes, I'm wearing the shirt, though you guys can't see it. Okay. There's nothing more I can say right now. I think right now everyone realizes the top is in, right? I warned you guys for a month. Been saying it since we broke 6,000. This is the top, the time to time your exit. Some people timed it well. Some people probably got wrecked in this area because of 2x, right? I'm sorry, guys, I can't help you. I know someone messaged me on Twitter saying, hey, I bought in at 7,500. What do I do now? Here's my answer to that. I don't know. I was trying to get everyone to be very cautious at $7,500 and to exit, not to enter. If you enter at 7,500, how do you expect me to help you when that was against my advice? Now, I don't even give trading advice, right? Like I keep telling you guys, this is an educational channel. You trade at your own risk. But suppose I was wrong, then I can kind of advise on what I would do if I'm wrong with my trade. But if someone does the complete opposite of what I would have done, how am I supposed to get out of that cluster? Because I don't know where it's going to go next, right? Like, take your losses. Like, I don't know. I could have been wrong, and anyway, I'm not going to spend too much time on it. Daily chart. I mean, look, don't panic. Don't panic. I mean, 6,500 is around the corner. But let's see. Let's see what can give us a little break. The daily chart is looking really, really bad. Now, the weekly chart is still bullish. But like I said, we can swing to 5,000 and then still go to a green 9. There's a possibility for that. All right. What is this? 4-hour chart. Hey, so you guys have to ignore this green arrow. I never adjusted this green arrow because this green arrow was timed at an earlier point in time, and it did not match my daily chart. So this green arrow, I mean, I don't know. I can leave it. I can delete it. Maybe I'll adjust it. I think we will bounce back up. I think this 50-day moving average will maybe not this high, but here's the 4-hour chart. I mean, look, if you're a good enough trader to time this exit, you should not be watching my videos. You are 1,000 times better trader than I am. Okay, this was my exit, and you guys saw my hesitation. It's a top, but too many exit points. That's not how markets top, but this is how markets top, and I tweeted that out too. Okay, if you're watching these videos and you're not watching my Twitter, that's a problem. I mean, watch my Twitter. Watch my Twitter. All right. I gotta stop arguing less. CoinDesk, I think, taught me a lesson. I'll shout out to CoinDesk in a second. I usually give them crap, but not this time. All right, time indicator. Let's see what we got. You know what? I'll do the back test. Oh, deleted the other one, but that's okay. Was it helpful? Well, it helped me here. This is where I started saying it's time to look for an exit. This 13 came. I kept saying it's time for an exit. Now this 9 came, bounced the price to the upside. I probably said there was a bullish entry here, but boom, you get out. You get the hell out. The moment this couldn't hold above the highs, and we did a live video during this candle. The moment it started going back down, you get the hell out. You get the hell out. Now it's a traditional. Now your moving average is going down. This 9 has a 13 in play. So maybe in 3 or 4 candles, you can have a dead cat bounce. Now the 4-hour chart has about 5 more candles of downside. So about a day, another day of downside. Let's go to the hourly chart. I woke up this morning, looked at the hourly chart. I mean, this I was tweeting. Here you go. 1.5 hours. 1.5 hours to get out at the top. This is how markets top. I've talked about this many times. You just had a moving average cross. Oh, by the way, going back to the 4-hour chart, I mean, this is what I was saying about the disastrous support zone breaking. I mean, I didn't get it. I was just too lazy to tweet it out. Like this is a disaster. This is bad. That was your support level. The moment that cracks, you're in trouble. It's no different. Just flip the thing over. It's the same thing I was saying when we were going to the upside. All right. You clearly had a high. I mean, I called the top at 75.05. That's when my tweet came, right? So, and on the 5th, right? I was talking about the 5th. Wow. Go back to my Twitter. On one of my tweets anyway. Here, this one. Look. Perfect 913.9 on 4-hour chart. Wait, where is it? Oh, here it is. Update. My prediction was for 6,900 on November 5th, not November 1, 2. We hit the price target too early. Time is more critical here, so probably higher in the price, right? But then look what I wrote. No matter how high we get before the segue to X fork, the damage by these bad actors has been done. So I'm expecting a crash to 5,000 either way. I was looking for a top on the 5th of November. I've talked about this in my Twitter before that, like a week out. That was where I was looking for a top. Here it is, November 5th. November 5th, the 4-hour chart of November 5th, right? If I go to the daily chart, November 5th, there it is, right? So that's the close. That's the highest close. Well, actually, no, I take that back. That's the highest close. But on the 4-hour, that's the highest close on November 5th, right? Anyway, let's just put it this way. If I had a time machine right now to go back 1 month and tell myself everything that was going to happen in the month of November, or in the month of October and November, I probably would not tell my past self anything, because I think me knowing what would have happened probably would have made my predictions worse. I honestly, it's scary. In my head, it's scary how well I got it right. I don't think that's ever going to happen again. That's just luck. It's just luck. Yeah, well, it's not fully luck. It's probabilistic. The probabilities worked out. I had a 60-40 shot of getting it perfect, and I got it. In my opinion, trolls on Twitter will disagree. And that's fine. They can disagree. Here's the hourly chart. I'm not going to spend much time on this. Woke up this morning, thought I was looking at the hourly chart. I was looking at the 30-minute chart. Doesn't matter. It was falling. You had a 9. You had a 1, 2, 3, 4 candle dead cat bounce, and now we've fallen. If you are a trader trading the hourly chart, your short was here. That's where your short was. Okay, that's where if you're a trader, this is where, Jesus, that's where you're shorting. Okay, you're going below the prior low. You're coming off a 1 to 4 candle correction, and you have a red number lower than a prior red number. Okay. I thought I was looking at the hourly chart. I was looking at the 30-minute chart. The 30-minute chart also had a 9. It gave you a slight rebound and then down. And the other thing I was going to mention, actually, I was going to tweet it out last night, but I was just like a little lazy. Let me go to the hourly chart. This here, okay? Does anybody know why? It's a rhetorical question. I'm not looking at your answers. So this hour right here, this was about 7 p.m. Eastern time. I was home, and the market just popped. So at this point in time, and I kind of should have tweeted it out. I guess I chickened out. Right here, this is what was happening. I was just about to tweet out, we're breaking support. And actually, what I'm about to say is really important. Really important. When this candle was forming last night at around 6, 7 p.m. Eastern time, I was already home. I got home from the airport, and I had a couple of consulting calls. When I got home, and after that was done, I was really busy with dealing with a couple of things, but I was watching this, and I'm like, wow, the market is breaking down. We're breaking below 7,100. We're about to do what we're doing right now. And then this giant candle came about. And I had no idea why that happened, because it didn't make sense from a technical perspective. Then I found out, like the following hour, around 8 p.m. Eastern time, that Bitcoin was mentioned on HBO, some kind of a Vice currency show, whatever, right? So this candle was basically a Bitcoin being mentioned by Vice on HBO. And I guess I chickened out tweeting it. And I said, in bear markets, these random news events make things look like they're rebounds, but they're not. All they do is short-term delay the inevitable. Now, this candle number 8 right here, the candle that took place, when did this happen? I guess at 5 a.m. this morning, 6 a.m. this morning. This candle should have taken place last night. The only thing that delayed it was the fact that there was this speculative buzz over Bitcoin being mentioned on HBO. But when the market turns, these kinds of things, like if that same thing would have happened a month ago, it would have drove it up and kept driving it up. But when it happens, when the prices are going down, all it just put it into a moving average, and then the inevitable continued. All right. So there's really nothing more I can say. Um, I had, I mean, there's nothing more I can say. Like, am I happy that the price of Bitcoin is going down? No, of course not, right? Like, I never sold any of my Bitcoin. I make this clear. I'm losing money with every dollar in price of Bitcoin, but I'm going to keep calling it how I see it. And this is not me driving the market down. The market is driving down. I was just able to call it. It is that simple. And there's no flippening. I don't even want to talk about B trash. It's no flippening, right? I mean, the B trash's significance to Bitcoin is no different than Ethereum's. It's a scam coin. That's all it is. All right. It's a long conversation why I didn't sell. I don't want to sell. Like, guys, I clearly don't do this for money, right? I actually do it because I enjoy it, though it doesn't sound like it with how frustrated I get sometimes. All right. Anyway, we're done. What is this? Oh, you know what? We're gonna talk about this on the World Crypto Network. I'm not gonna talk about 2x here. CoinDesk. Hey, CoinDesk. Shout out. I don't know some of these people. I mean, I know. Well, I don't know this person, right? Tour de Meester, awesome. Willy Woo, awesome. Chris, no. Chris, you're a good guy. I like your research. I like your analysis, but your view on shitcoins is very troubling. And Spencer, I'm not too familiar with Spencer's work, but I'm sure he seems to know what he's doing. Never heard of this guy. Peter Brandt is very respected in the trading community. I'm here, never heard of this guy, and I've heard of Crypto Cobain, though I've never seen any of his work. Okay. Now, this part was the part that was interesting. Whale Panda, I feel should be at the top of every list relating to Bitcoin, and at the top of that list, Wufopoloniacs. I don't really follow his work, but they didn't make the list because they bicker too much on Twitter. And I'm gonna try and bicker less on Twitter. I'm just gonna ignore children on Twitter and trolls. Okay, very important. I had to tweet this out. There's a huge misunderstanding of futures, and I think I've already rambled on for a little too long, unfortunately. Sorry, guys. Totally my bad. Where's my Twitter? What's going on here? Okay. Oh, shout out to Coin Daddy. That was a funny rap video. Not very appropriate if you're at work with speakers blasting, but I thought I retweeted something. How come I don't see it? Oh, because I'm on media. My bad, guys. Totally my fault. Man, Twitter starts to blow up when you go to 50,000 followers. I'm almost at 50,000 followers. I want to talk about this. I really, really do. Okay. It's a huge misunderstanding of how the futures are going to work. And maybe I'll save that for another video. I'm not going to talk about it much because I know, unfortunately, this video went on enough. Maybe I'll do a specific episode, specific podcast where I talk about the CME futures. I'm not looking at your questions yet either. Maybe I should get to those soon. But the futures are cashed out. Like, this is a long conversation. It's a long conversation. Actually, I am gonna save the conversation because what I'm I'm going to recommend people do is please go to Wikipedia. Please go to Wikipedia and read the entire page of futures contracts on Wikipedia. It's actually really, really good. Just for definitions, right? We're going to talk about how to trade them later, right? But it just even just the first sentence. In finance, a futures contract is a standardized forward contract, a legal agreement to buy or sell something at a predetermined price at a specified time in the future. Okay. When I was working on Wall Street and people would come in for interviews, one of my favorite questions to ask them was, what is the difference between a futures contract and a forward contract? Because I had to deal with both of them, right? So just please read over these definitions. And down here, this is actually also really, really good. It's very, very simple, right? Physical delivery and then cash settlement. Okay, you have to read the difference between them, right? I believe I have time. Later this week, I will do another video and I will specifically talk about the CME futures that they're doing. Okay. Okay. So so I don't need the CoinDesk thing. Okay, so that's done. That's done. All right. I think I can turn on my camera, and I'll get to your Q&A in a second, guys. But buy the dip, but not yet. I mean, you can buy Bitcoin at any time, but if you're a trader, I mean, look, I'm not gloating, right? Like I'm not gloating. Like people are gonna start talking all this shit that Tone drove the market down, and Tone is happy about the price. No, I'm holding on to all my Bitcoin. Why would I be happy about the price? All right. So if you look, when this future question came up, I decided to go upstairs. I do have 2 floors in my apartment, and grab some books off of my shelf. Okay. And I grabbed a bunch of books. Just want to show them to you. Active Portfolio Management. Not a very thin book. Okay. I'm going to open this book because I've read this book. I don't read books, by the way. Like my reading attention span is about 4 pages, unless they're textbooks, right? Because this is what I studied in the university. I studied financial engineering. Okay. Like, look, I'm just going to go to whatever here. Chapter 2. Chapter 1 is usually useless. Chapter 2. Okay. What are we talking about here? Look. CAPM. Any finance guys here? CAPM. All of these highlights are mine, by the way. All right. Flip a couple of pages. They don't mess around, guys. Here. Page 29. We're already getting into some serious stuff. All right. Highlights are mine. This is quantitative finance. Okay. When you make fun of the guys on Wall Street, they can read this book. I mean, I can't read this book today, but look, this is the kind of stuff. This is chapter 2. Chapter 2. This is efficient market hypothesis theory. Okay. So why am I going to this? Like, look at some of the questions. These are the questions that you have to answer when you read this chapter. All right. Done with that one. Financial calculus. Don't even get me started on this thing. Oh, by the way, if I open that book to like chapter 25, you'll still see my highlights. Okay. Look, this stuff like, I'm trading futures contracts on BitMax. I know what I'm doing. No, you don't. No. You really, really don't. Okay. It's not the same. This is the reality, right? Like here, page 464. There it is. My highlights. My highlights. It's the kind of thing. This is the kind of book they expect you to cover in one semester. Yeah, just because this book is small doesn't mean it was easier than the other one. I'd rather do the other one. All right. There's a reason why I'm going through this, by the way, guys. There it is. No, page 12. We're already in math theory. I mean, there's no How far we're going in this book? There you go. Page 140 for this tiny little thing. It's literally differential equations. All right. I'm not going to open these up. Analysis of financial time series. Applied linear regression. And these are the ones that I happen to save because I have too many of these things. But here's the big boy. Here's the big boy. Okay. Here's the book. Here's the master book. Okay. I hope people that are watching this right now know what I'm holding. Options, futures, and other derivatives. Okay. This was the book for understanding derivatives throughout the 90s. Okay. This was the book. Okay. So this is the 6th edition. I believe it was published in like 2003. So this is old. Okay. So it's the book by Hall. It's on every quantitative analyst's desk sits this book. And they reference this book. Like physics PhDs know this book by heart. Okay. Now this is the theory. This is the theory of how these things come about. Okay. Introduction. Here. I'm on page, again, they don't mess around. What are we on here? Okay. This is page 11. It's the introduction. You know, you're already talking about options. You're already talking about options. Now, the great thing about this book is the following. As much of a pain in the ass this book is, every like 10 pages, they have these, you know, really cool stories. Okay. Now, this book is old, but I want to read some of these because it's important. Okay. So this is old and it's a little outdated, but here it is. Business Snapshot 1.1. So the first business snapshot that they show you. Okay. I'm going to try and read this fast, but anyway, hedge funds have been major users of derivatives for hedging, speculation, and arbitrage. A hedge fund is similar to a mutual fund in that it invests funds on behalf of clients. However, unlike mutual funds, hedge funds are not required to register under the U.S. federal securities law. This is because they accept funds only from financially sophisticated individuals that do not publicly offer their securities. Mutual funds are subject to regulations requiring that shares of the funds be fairly priced, that the shares be redeemable at any time, that the investment policies be disclosed, that the use of leverage be limited, and no short positions are taken on, and so on. Hedge funds are relatively free of these regulations. This gives them a great deal of freedom to develop sophisticated, unconventional, and proprietary investment strategies. The fees charged by hedge fund managers are dependent on the fund's performance and are relatively high, typically 1 to 2% of the amount invested plus 20% of the profit. Hedge fund growth, in particular, with about 1 trillion being invested throughout the world for clients in 2004. Okay. Yeah, so this book, I think I updated this book. So this was like a 2004, 2005 book. And then they provide you some things like coverable arbitrage. Take a long position in a convertible bond combined with an actively managed short position on the underlying equity. Distressed securities. Buy securities issued by companies in bankruptcy or close to bankruptcy. Emerging markets. Anyway, and so on and so on. So I'm not going to read that part, right? Just one more. So derivatives were very, very new. Options were only invented in like the late 80s or like the mid 80s. This is all new stuff, okay? So here, Business Snapshot 1.2, the Barings Bank disaster. Derivatives are very versatile instruments. They can be used for hedging, speculation, and arbitrage. One of the risks faced by a company that trades derivatives is that an employee who has a mandate to hedge or to look for arbitrage opportunities may become a speculator. Nick Leeson, an employee of Barings Bank in Singapore, in the Singapore office in 1995, had a mandate to look for arbitrage opportunities between the Nikkei 225 future prices on the Singapore exchange and those on the Osaka exchange. Over time, Leeson moved from being an arbitrager to being a speculator without anyone in the Barings London head office fully understanding that he had changed the way he was using derivatives. He began to make losses, which he was able to hide. He then began to take bigger speculative positions in an attempt to recover the losses, but only succeeding in making the losses worse. By the time Leeson was found out, his total loss was close to $1 billion. As a result, Barings, a bank that had been in existence for 200 years, was wiped out. One of the lessons from Barings is that it is important to define unambiguous risk limits for traders and then monitor carefully what they do to make sure that these limits are adhered to. Okay, I got one more, and this one's my favorite. One more, guys. It's great. It's like this is what I'm going to be reading to my 5-year-old child. Okay, when I have children. One more. And this one is important because it shows you the difference between cash settlement and delivery. A futures contract can be delivery of the underlying asset, or it could be cash settled. Let me read you Business Snapshot 2.1, Chapter 2, page 22 of the Options, Futures, and Other Derivatives. This story was told to the author of this book by a senior executive of a financial institution. It concerns a new employee of a financial institution who had not previously worked in the financial sector. One of the clients of the financial institution regularly entered into a long futures contract on live cattle for hedging purposes and issued instructions to close out the position on the last day of trading. Live cattle futures contracts trade on the Chicago Mercantile Exchange, and each contract is on 40,000 pounds of cattle. The new employee was given responsibility for handling the account. Okay. When the time came to close out a contract, the employee noted that the client was long one contract and instructed a trader at the exchange go long, not short, in parentheses, one contract. The result of this mistake was that the financial institution ended up with a long position in 2 live cattle futures. By the time the mistake was spotted, trading in the contract had ceased. The financial institution, open parentheses, not the client, close parentheses, was responsible for the mistake. As a result, it started to look into the details of the delivery arrangements for live cattle futures, something it had never done before. Under the terms of the contract, cattle could be delivered by the party with the short position to a number of different locations in the United States during the delivery month. Because it was long, the financial institution could do nothing but wait for a party with a short position to issue a notice of intention to deliver to the exchange and for the exchange to assign that notice to the financial institution. It eventually received a notice from the exchange and found that it would receive live cattle at a location 2,000 miles away the following Tuesday. The new employee was dispatched to the location to handle things. It turned out that the location had a cattle auction every Tuesday. The party with a short position that was making delivery bought cattle at the auction and then immediately delivered them. Unfortunately, the cattle could not be resold until the next cattle auction the following Tuesday. The employee was therefore faced with the problem of making arrangements for the cattle to be housed and fed for a week. This was a great start to a first job in the financial sector. Okay? So that's an example of the difference between cash settled and physical delivery. Okay? Now, lots of people trade cattle futures. I've never traded cattle futures. I've traded oil futures. Okay? I do not have the ability to take possession of 1,000 barrels of oil, I will probably be in prison because the government's going to be very, very curious. What the hell am I doing with 1,000 barrels of oil in my New York City apartment? Okay. On the flip side, I would not be able to deliver 1,000 barrels of oil. Okay. The same thing happens with gold. 90% of all of these futures contracts, they get canceled by the buyer. They get canceled by the seller. They sell them. Nobody wants to deliver the shit. Nobody. Nobody wants to deliver or take possession of anything in this futures contract. Okay? Now, why would they exist? Well, here's an example. If an OTC trader of Bitcoin has made a deal to sell someone Bitcoin, they can immediately hedge that position with a futures contract, okay? Because it's cash settled. On the flip side, anyone is allowed to speculate. This is why I was trading oil futures, because I can. But there's no way in hell. If I screw up, the exchange knows that I cannot take delivery of these, or I cannot provide delivery of these contracts. They will liquidate them for me. Okay. They just get sold. 90% of all of these futures, they just get canceled out in the opposite direction. Okay. So this is not going to have a big effect on the Bitcoin market. Okay. Yes, there could be, everyone is going to scream manipulation. This company just bought, 800,000 contracts of Bitcoin, but that just means there's another company on the other side taking the opposite trade. They're going to cancel themselves out. And actually, because there's no settlement, they don't even have to cancel themselves out. They can just wait to expiration and then they just exchange the money. Okay. The effects of these futures contract on the actual Bitcoin underlying price is going to be very, very minimal. Very minimal. Okay. It'll actually probably make it less volatile. Okay. I have no problem with the futures contract. Okay. I will be naked shorting this stuff. This is the thing, right? Like the gold bugs are screaming that people are naked shorting gold futures, right? But look at the Bitcoin ones, right? Even if Bitcoin had physical delivery, I can still naked short the Bitcoin futures. Okay, I probably won't, but well, maybe I would have probably the moment right before I tweeted that out, but I might not have made the margin, right? That's the thing, right? Like you're going to get a margin call when it spikes like that. And they have restrictions. Anyway, I'm going to talk more about the futures later. Maybe I'll read that story again when I talk about futures. There's also like they have stories from long-term capital management and what happened there. But anyway, people are completely misunderstanding what the real futures do, what they're for, how they're traded. Complete misunderstanding, completely. Okay, so I'll talk more about this soon. But also keep in mind the CME exchange, they're taking on very little risk. Okay, they're just matching buyers and sellers. Okay, they're just matching buyers and sellers. Now they do have an insurance fund. They need an insurance fund in case one of the counterparties in that contract like disappears or the company goes broke or they can't fill the margin and there is slippage. So the big question that needs to be asked is the CME going to have a separate insurance pool to cover issues in these contracts? Or is it a pool that has other derivatives in it? Because if it's a pool that has other derivatives in it, it could have some problems because now if the Bitcoin futures blow up on them, it could affect, let's say, the cattle futures, right? So if they have an independent pool of backup liquidity, and this would be probably in US dollars, maybe they'll buy some Bitcoin. I don't know if they legally can hold Bitcoin. There's lots of legality there, right? Like people give crap to Blockstream that they raised a bunch of money, but they're not holding that money in Bitcoin. That's because they would have to file as a hedge fund to hold raised money in a speculative asset that is unregulated. Okay, people are nuts. People are nuts. I mean, look at Ethereum. Ethereum held all of their assets in Bitcoin because they sold their scam token for Bitcoin. They held it in Bitcoin through the Bitcoin bear market. That almost destroyed the Ethereum project. Unfortunately, it didn't, and it gave us ICOs. But that's what regulation would not have. If Ethereum was a legit company, like it was supposed to be, and not a scam, they would not be allowed to hold the money that they raised in speculative Bitcoin, because because they would have to file as a hedge fund that's speculating on their investors' money. Okay, it's supposed to be in the currency that you're in, the jurisdiction that you're in. Anyway, let me take some of your questions, guys. I don't really want to get into the futures right now. I don't know why. I really planned on it, but I'll talk more about the futures, maybe on the Bitcoin group later today or something. So go ahead and check that out. Let me get to some of your questions. I don't think Rich is around to compile them for me. So either start with the word question or ping my name so that I see it. And the chat's scrolling really, really fast. And if you tip with your question, even $1, it will be very easy for me to see it. All right, next. Okay, first question. Do you think Bitcoin.com is an issue since so many people? Yeah, Bitcoin.com is a scam website now. Yeah, I mean, look, there's nothing we can do, right? I mean, all we can do is hope that in 10 years, Bitcoin.com is as relevant as Internet.com. I mean, that's all we can hope for, right? I mean, go use Bitcoin.org. I mean, Bitcoin.com is selling you fake Bitcoin and pretending to be Bitcoin. So I mean, what am I gonna do? Like, again, right? Like, I was just trolling when I said, but I was trolling, but I was kind of serious, right? Like here, I have to share screen. Oh shit, bad idea. Totally screwed that up. Shared the wrong screen. Let's see. Let me share the right screen this time. So the problem with multiple monitors. Uh, where am I here? Right. So here. Anyone else think there should be a class action lawsuit by those who got wrecked in the Bitcoin futures, the scam coin futures, against the exchanges that listed the Bitcoin attack and all of the signers of the Bitcoin cancellation agreement, right? Look, I don't know what you guys want me to do about Bitcoin.com. It's not my problem, right? The community needs to, I mean, look, I don't know what you guys want to do. You don't want to go to the government and complain that they're selling fake Bitcoin. Fine. I'm okay with that. Like, I'm not running to the government, right? I'm ignoring the fact that the website exists. And I'm warning people that that website is selling you OneCoin. I mean, that's what it is to me, right? I mean, Bcash is OneCoin. It's BitConnect. It's the same thing. It's the same thing. Yeah, I don't really have anything else to add. Let's see here. Yeah, the chat's scrolling so fast. All right. Guys, I don't know if you should sell or buy Bitcoin. I have no idea. I'm looking at the price. I don't see a bottom yet. I mean, when I see a bottom, I'm going to tell everyone, right? I'm not going to, I don't have a specific person I talk to, right? I mean, I have my own chat groups that I don't even speak in. So, um, I generally ignore people that ask me questions that are specific to their trading. Like, it's not my problem. It's if you make a stupid decision, then it's not my problem. All right, next question. Do you think Bitcoin? Oh yeah, that's the Bitcoin.com thing. What do you think we will see this weekend? I don't know. I don't know, guys. Like this morning, I thought that we would be at 6,500 by Monday, but now we're at 6,500 by Friday afternoon. How the hell do I know what's going to happen on Monday? Tone, do you really think that Bobby Axelrod learned financial calculus? Um, the actor that plays Bobby Axelrod or the Axelrod that's portrayed in the movie? Um, he may not have learned it with a textbook, but he can read that textbook and understand it. See, what you guys have to, okay, here's the thing, right? What you guys have to realize is, yes, it's usually the crazy college dropouts that create some of the best innovation and the greatest companies we have in the world. But the reverse isn't true, right? Just because you're a high school screw up does not mean you are going to change the world. Okay? People seem to think that just because you dropped out of high school, you are going to change the world. And in reality, you're 99.999%, you're going to be a bum. Okay? That's the reality. Okay? Don't, I mean, Zuckerberg left Harvard because it was going to do nothing for him. He didn't need it. Okay? But if you fail Harvard or if you fail your community college because your IQ isn't high enough to graduate, you probably will not form the next greatest revolutionary company the world has ever seen. That's not how it works. It's just not. Oh, and by the way, speaking of books, after I left Wall Street and I started doing, I left Wall Street to focus on a different hobby than Bitcoin, and it was this. Okay? My um my hobby before Bitcoin was diet, exercise, and competitive athletics. Okay? So, uh as of today, I'm back on my diet and I'm back to exercising because I got to speak on a cruise in 2 months. And there's no way in hell I'm going to look the way I look now without a shirt. All right. Because those pictures will be hitting the net. Tone, is it possible to get your TD setup countdown and TD backtest indicator on TradingView? Absolutely. Please go check out the consulting section of my website and email me. And I have a huge backlog of email to get back to people that want to purchase the code. I'll get to you. I promise. I'm gonna start emailing back today. But yeah, it's possible. I don't care why B Trash is skyrocketing. For the same reason why BitConnect is getting 1,000 people at their seminars. I mean, when you lie to people, you're gonna get them to give you money. What am I gonna tell you? VXX calls now. VXX is I believe VXX is the VIX of the Nasdaq 100. All right, next. Guys, I don't care about Tether. I've talked about Tether. I know Bitfinex is pissed at me. Maybe me and him can do a podcast. I don't know. I don't know. Like, clearly, Tether was not manipulating Bitcoin to the upside because then I would not be able to call the top. You know? They can print 100 million Tether tomorrow. It's not going to change where Bitcoin price is going, which is already be below 6,500, guys. I don't know what you want me to say. Like people make like mountains out of molehills between the gold manipulation and this other manipulation and Bitcoin manipulation. Come on. If it was really manipulated, would I be able to make these calls? I'm not that good. I'm not actually moving the market. That's just ridiculous, right? I don't know what you want me to say. We're at below 6,500 now. Buy the dip. I'm not buying the dip yet. I'll wait till I see signs of the bottom. I'll let you guys know. I'll let you know. I see a bottom. I'll let you know. Am I scared? No, God, no. My Bitcoin's in cold storage. I'm not scared. I don't know how long the bear market is going to last. Guys, 6 hours ago, people were calling me an idiot for getting the top wrong. Now everyone wants to know where I think the bottom is. I have no idea. Should we sell? It's too late. It's too late. It's too late. Right? It's too late to sell. Right? The time to sell was between 6,000 and 7,500. I was telling you guys all of October, this is the time to look for an exit. If you sell now, you are panicking. If you are panicking as a trader, stop trading. I don't care about the altcoin market. I'm too busy with the Bitcoin market right now. How will Bitcoin transform global financial trading market in the next 5 years? I don't know yet. I really don't know yet. Honestly, I just think it's just going to be another asset. I don't think it's going to transform it. I don't. I think we're so far away from Bitcoin transforming anything. It's just peer-to-peer value transfer. Let's hope U.S. government doesn't classify it illegal. Do you think the futures price will follow Bitcoin price? Of course it will. No. The futures are cash settled. It will absolutely follow the price of Bitcoin, not the other way around. Okay. Look at it this way, right? You have the S&P 500, which is the aggregate price of 500 stocks. There is a future on the S&P 500. Does Apple stock depend on the S&P future? Of course not, right? Apple, Microsoft, Netflix, Amazon, you average out those prices and you get the price of the S&P 500. And then you have a bunch of people trading the future on the S&P 500. Just because some institution decides to naked short 800 billion futures contracts for a total global value of $100 quadrillion. That does nothing to change the price of Apple, Amazon, and Netflix, right? I mean, the price of the futures will follow the price of the underlying. Now, do I think there's going to be some institutions that are going to buy a bunch of futures and then attempt to crash the underlying price in order to profit from the futures contract? Probably, right? Am I going to try to front run my tweets about the price of Bitcoin by buying or selling the futures contract first? Probably. I don't know. It depends how much free time I have. And it depends if I really care that much. Like, people still haven't realized I don't really care that much about money. I really don't. Like, if I cared about money, I would have stayed on Wall Street. All right. I don't. I quit to enjoy life, which may look like to you guys I'm not enjoying, but I actually am. But anyway, no. The price of the future will not be following. I'm sorry. The price of Bitcoin will not be following the futures. The futures will be following the price of Bitcoin. I'm not going to talk about scam coins, guys. Even if it's B trash, like it's trash. It's one coin. It's Paycoin. It's Aurora coin. It's no different. It's no different. Let me ask you this question: anyone that thinks that B trash has any kind of viability, please tell me who is developing the code, who is editing the code, who has admin rights to change the protocol. And I would love to know their background. Please do this investigation for me before you ask a dumb question like, is B trash gonna surpass Bitcoin? Oh God, the chat's scrolling too fast. I probably lost a bunch of questions. All right, guys. I think I'm gonna go. It's past 2 o'clock. We're gonna do the Bitcoin group. We're probably gonna talk about a lot of this stuff conceptually. But I think that's it. I think that's it for me. I really don't have much else to add. I don't know. Like I need to get back to this. I really do. And hopefully I'll find time. But I'll try and do more of these videos. I know there's a lot going on, but hey, come on over to the World Crypto Network. We should kick off a podcast within the hour. Talk to you all on the next one. Thank you for watching. I'm up to 1,700 viewers, and I promise I'll reply to the emails. I have like a week's worth of email backlog. I'm going to ignore all the ICO bullshit, and I'm going to reply to those that want to do consulting or that want to purchase the code to help. On this note, I don't know where the bottom is. I mean, I have a random guess at 5,000 because that's where I'd like to see it. But if it doesn't bounce at 5,000 or vicinity, could get ugly, folks. I'll keep you posted. We'll see. Hold on to that Bitcoin. Buy the dip. Talk to you all later.